Good morning, this is Tony Cherniawski, manager of the Practical Investor LLC. Today is September the 5th, 2009, and the topic for the day is Let the Trend Be Your Friend. This video is meant for instruction and entertainment purposes only. This is not a solicitation to buy or sell any security. A purchase or a sale of a security may result in a loss of principal. Please consult with an expert advisor who may explain the risks of any investment you may wish to consider. You cannot invest directly in an index. Well, good morning, and it looks like things are changing again. So I'd like to bring you up to speed with what I see in the markets. And let's just begin with the Dow Industrials. And I'd like to show you both a weekly chart and a daily chart of each of the Dow, the NASDAQ, and the S&P. Let's just begin with the Dow. Here's the weekly chart of the Dow Industrials, and there's a couple of things that I'd like to point out. First of all, everybody seems to be waiting for these Fibonacci retracement levels, and the 50% level on the Dow is 10,334. So it seems as if everybody is long to 10,334 or something like that. But what I'd like to point out is that there are other potential attractors or something that might actually repulse the Dow down again. And let's just talk about attractors and repellers for a minute. What I call them is support and resistance. What we have here is two support resistance lines. The first one coming from what appears to be sort of a diagonal head and shoulders pattern, the blue line. This is what seemed to hold the Dow up at least until the drop last October. And since then, we've been below that line, and it appears that this is an important repeller or resistance level. But in addition to that, it seems as if we also have another one, which is the horizontal line coming from the 2004 low. This was the support area for the Dow to make its new all-time high. So given that information, what we have here is a support and resistance area. Basically, what was formerly support is now resistance. We've got two such lines that the Dow has come up to and has been repelled away from. So what we have is a situation where we need to be very, very cautious about what we're seeing on the Dow. I'm not saying we should ignore Fibonacci altogether, but let's move on to some of the other charts, and we'll see why this might be so very important. The next item is the Dow Industrials on a daily chart, and what we see here is the Dow Industrials have come down to a red dotted trend line. This is an ending diagonal pattern. It suggests that possibly there might be a little bit of support. So in this case, if we go back to the weekly again, the trend lines, if you will, may be a bit unfriendly, or at least we're not really certain that they are in our favor, and yet we have a diagonal trend line here on the daily chart that says, yes, we have some favorable trend with the Dow so far, at least. So it looks like if we see a break of 9,500, then it appears that that favorable trend is no longer with us. So that's one of the reasons why I'm suggesting here in the title, Let the Trend Be Your Friend. Now let's look at the NASDAQ weekly, and we have something totally different here. What we have is a double resistance, if you will, at the 2005 December high. And now we've reached that point again, and we've been repelled away from that resistance. Surprisingly, or maybe not so, maybe we've seen the Fibonacci's working on the NASDAQ 100 because we came within 20 points of the 61.8% retracement. So on the weekly, again, we have the Fibonacci's now and support resistance lines that are saying no further, at least for now. If we go to the daily chart, we also have a diagonal trend line, the red dotted line that says we've now gone below that. There's danger ahead, or at least caution ahead for the NASDAQ 100. Going further, let's look at the S&P 500, and we have a similar situation. Again, we have a diagonal head and shoulders pattern. Again, for lack of a better expression, I don't really understand what that means other than the fact that it's produced a support resistance line that's being respected by the Standard & Poor's. But in addition, at the very same point, we have also the 2004 low. So this is where the Standard & Poor's went no further in its decline, and as a matter of fact was able to launch a rally into the 2007 highs. So here again we have the trend not being your friend on the weekly charts, and I'd like to just urge caution on the Standard & Poor's index. In addition to that, let's look at the daily chart here. We also have caution being urged on the daily chart. The trend line, as we've drawn it here from the March lows through the July low, seems to have been broken. And if that's the case, we are in danger here of the trend not being our friend in the S&P. So, given all that information, what I'd just like to say is we need to watch this area right now. We're at a critical point. One of the things that I didn't add is that we've come down to the 50-day moving average on these daily charts. I think every one of them is sitting at the 50-day moving average. A lot of people watch that as well. So there's a number of different techniques to watch and see, is the trend your friend or not. And this is just a word of warning here. This is a cautionary time. Let's make sure that the trend is our friend in whichever direction we're invested. Thank you very much for the time today, and I'm glad that I was able to share this with you. One of the things that I would like to mention is that we have a daily newsletter that keeps track of what's going on with these indexes. Please consult with my website, thepracticalinvestor.com. Under Other Services, we talk about the daily newsletter. And in addition, you can contact me, Tony Cherniawski, at tonyc@thepracticalinvestor.com, and I'll be glad to send you information about this. We've been following this now for a few weeks. We've watched the market topping out, and we're just as interested in you are. Is the trend still up or is it down? Thanks again, and have a great fall season.